So I'm going to be brutally honest with you in today's video, right? So what you're resisting or dismissing in your trading is actually the thing that you need to make money from trading. I'm going to repeat that once again. What you have been resisting or dismissing in your trading is actually the thing that you need to make money from trading. So that is if you are serious and not just curious about making money from trading. So essentially what I'm going to share with you are certain points, actually 3 points that can enable you to make money from trading. Now your question might be, how much of money? Well, that is obviously dependent on the market, but also dependent on you. But these are the things that I look at, these are the things that I follow, and these are the main 3 points that have enabled me to get to that point. That I'm telling you that if you do what I'm about to share with you, you will make some money from trading. And like I said, I can't guarantee you how much it will be, but you will make some money from trading, right? So the first thing that we need to understand, or the first point that you need to look at is, or the first point that you need to accept is, you need to accept that you have no control. And when I say you have no control, you might be puzzled that what do I mean when I say you have no control? Well, that means that you need to allow the market to work for you. Stop trying to work for the market. Remember, I said I'm being brutally honest with you. Stop trying to work for the market. Allow the market to actually work for you. And allowing the market to work for you means that once you have your position opened, or once you have a position placed on your trading platform, then it is no longer in your control. So that is what I meant when I said you need to give up control. Because the moment you start believing that you need to do the work, you need to put in the work. Yes, you need to put in the work in terms of preparation, doing your research, generating those trade ideas. Obviously, you need to do that. But once you have a position on, that is when you need to then allow the market to work for you. Because that is the whole aim. It's essentially like the fancy statement that most people like to use, that make your money work for you. That's essentially what trading is. You making your money work for you. But if you've decided to become a slave to the market and actually do the work that the market should be doing for you, that is when you're going to always fall short, because you are going to do a lot of mistakes, because you are involving a lot of human error into the process. So that's the first point, that you need to allow the market to work for you. Perfect example of allowing the market to work for you is this trade that I have right in front of you on Ethereum, right? What do I mean when I say allow the market to work for you? Because had I not allowed the market to work for me, I would probably have been out of this trade by now, before the market actually even started to move, right? But because when I had the position opened, I embraced and gave up control, because I had done my work, I had done my research, my fundamental analysis and everything. But at this point, when the position is open, it is up to the market to do what the market does best. And that is how I gave up control. And I allow the market, whether it's going to move slow, whether it's going to move fast, I have no control over that. But I allowed the market to do what it has to do. So that's the first point. It is very important that you allow the market to work for you. Stop being a slave to the market. Stop trying to micromanage your trade. Stop trying to mess around with your stop loss. No, stop it. If you are really serious about making money from trading, stop doing that. Allow the market to work for you. Then, second point is that you need to focus on fundamentals. And I know majority of you've been resisting fundamentals ever since you started trading. Some of you have been trading for 10 years. Some of you have been trading for 5 years. Some of you have been trading for 2 years. You haven't made money from trading. You haven't been consistent in your trading process. Why? Because you've resisted fundamentals. Because everyone says fundamentals do not work. Fundamentals are not necessary. Let me tell you something. That is the reason why you're not making money from trading. That is one of the reasons, one of the big reasons to be exact, why you're not making money from trading. Because you've been fed this lie that you've bought into, of the fact that fundamentals do not work. Financial markets are driven by fundamentals. It's not a guessing game. There is rhyme and reason to how markets move, and it is all based on fundamentals. This trade right here, Ethereum, it's cryptocurrencies, and I've heard people say, if you want to trade crypto, you don't need to focus on fundamentals. Good luck with that. And if you are that person, just comment down below and tell me how is it going. Are you even in this move that we're seeing right now, or did you just buy now at the top because you've seen that the market is actually moving? Because fundamentals are important. Because here's the reason why fundamentals are important. They allow you to think ahead. They allow you to think ahead. So fundamentals actually prime your mindset so that you can be forward looking, because markets move based on what? Based on future expectations. That is what markets are moving based on. So focusing on fundamentals allows you to think ahead. Based on this position right here, firstly, I said that I allowed the market to work for me. Obviously, that's one of the reasons why the trade worked. But one of the main reasons why the trade worked is why? It is because I focused on fundamentals. When the Fed actually started lowering interest rates, not necessarily that I had to wait for things to get to that point, but when I was anticipating that the Fed was actually getting closer to lowering interest rates, that is when I started looking to buy crypto, because I knew that at some point, thinking ahead, crypto markets are going to rally. How big was the rally going to be? I had no idea. I had no clue. But once again, I just understood that if I'm focusing on fundamentals, I need to think ahead. And if I'm allowing the markets to work for me, then eventually the market is going to work for me. So they cut interest rates on the 18th of September. So that was... exactly on this day, the 18th of September. That is when the Fed actually lowered interest rates. That should have been confirmation for you. That risk asset will eventually start rallying at some point. But that would only have been confirmation for you if you had not been dismissing fundamentals, but if you were paying attention to fundamentals, because from then you started thinking ahead. It may not happen today, it may not happen tomorrow or the next day, but at some point in the not so distant future, crypto is going to start rallying because the Fed is lowering interest rates. That's just how markets move. That's just how markets are. Whether you like it or not, whether you feel that price action is king or not, whether you feel that fundamentals are useless or not, that is just how markets move. So if you are serious about making money from trading and you don't want to remain stuck from where you are right now, that is, if you are stuck, start focusing on fundamentals. Start trusting in fundamentals. Start thinking ahead. Do not trade what is happening today. Trade what you expect to happen, what could potentially happen based on the data or the decisions that are happening today. That is what fundamentals allows you to do. Then the third point that's going to help you make money from trading, it is buying low and selling high. Make it your primary objective to buy low and sell high. If you are buying crypto right now at this price, I'm going to use Ethereum because it's what I have on my screen, but if you're buying Bitcoin at $82,000, you are buying high. That is not a prudent decision. I'm not saying that crypto won't continue going higher from $82, maybe go all the way up to 85 before it starts pulling back. That's not what I'm saying, because no one can predict how big the move is going to be. But what I do know is that markets ebb and flow. And if you buy at 3,300 on Ethereum, or you buy at 82,000 on crypto or on Bitcoin, then you are buying high. And that is a recipe for disaster. Because chances are you might be over leveraging and you won't be able, or your account will not be able to withstand the pullback or the drawdown that you might experience when we do see a pullback in crypto. So the third point is making it your primary objective that if you're looking to buy, you buy low. If you're looking to sell, you sell high. How is that resembled on this trade? Well, starting with the first position, buying low means that you're using technical analysis, whatever form of technical analysis you use. I just use basic supply and demand. That's all I use, because technical analysis is a very small portion of my whole process. Fundamentals is the biggest. Once I'm clear on fundamentals, then technicals is the easiest, right? So this is the demand based on the weekly time frame, right? So it's this demand level right here based on the weekly time frame. Just want to be more accurate with it, right? So this was the demand level right here. Let's go back to the daily time frame. That is the level where I initially bought, right? So this is where I had my first position on Ethereum. Then my second position was obviously around here after we had the whole interest rate decision. So the first position I took in anticipation that interest rates are eventually going to go lower in the United States. I was using fundamentals to think ahead once again. Then the second position, there was obviously confirmation that interest rates are expected to continue going lower in the US. Whether it's a 50 basis point or 25 basis point, at this point it did not matter. But what was clear was that the path ahead is lower interest rates for the US, and that would be positive for risk assets. So what happened? I bought low the first time, so I'm definitely not going to buy here at the highs. I'm going to wait for price to pull back so I can buy low again, because I understand essentially how buying and selling works. You always want to buy at a discount and sell at a premium. That's a prudent decision to do, whether it's with trading or whether it's in your general life or general interaction or transaction that you do. You're always trying to buy at a discount and sell at a premium. That's what you're trying to do. And discounts and premium differ for everyone. 100 million might be a premium for someone, but it might be a discount for someone who's a deca-billionaire, right? So premiums and discounts differ for everyone, but essentially the prudent thing is to always buy at a discount, buy low and sell high at a premium, right? So what did I do in this regard? Same thing. Like I said, I only use basic supply and demand. So I waited for price to get back to my level of demand. Then I scaled in another buy position, which was my obviously the second this second buy position here, right? So I scaled in the second buy position here. If I was also intending on scaling in another position, I could have also done it here when price was what? Not at the highs, when price was back at the lows. Buy low, sell high. So what I could have done there, same thing. Here's a demand zone that we have right here. Price came back to this demand zone and now the market is rallying insanely, right? But the key thing that I want you to understand or to take away from this video is focusing on these 3 points. Like I said, being brutally honest with you, right? This is no fluff. If you're really serious about making money from trading, allow the markets to work for you first and foremost. Accept that you have no control once you have a trade running. Secondly, focus on fundamentals so you can start thinking ahead. Don't be stuck in what is happening today. Think ahead. Thirdly, make it your primary objective to buy low and sell high, because that is a prudent decision. Buying at a discount, selling at a premium, right? So that is what I wanted to share with you in this video. And if you found value from this video, you're definitely going to like the next video that's going to pop up on the screen right now. So watch that video and let me know how you are transforming your trading or how you are actually applying these 3 points that I've just shared with you. And if you want to learn more, then click the first link in the description so that you can explore some of the services that I do offer. And that's only if you are serious. My services are not for everyone, but if you are serious about transforming your trading, then you can check out or click the first link down in the description.